good year so far. Well, now, what to do from a stock perspective? That's the question that we are discussing with the independent metal analyst Rahul Jain. Rahul, appreciate you being with us on the show. So, we were just hearing all the fundamentals from the global market side with our colleague Manisha over there. But stocks have also run, right? I mean, it's been a very good rally for most. The metal index this year is up about 17%, one of the better performing indices. So the question is, what is still left on the table? You give us your sense, ferrous, non-ferrous. Where would you still bet for the rest of this year?
So, see, the commodity underlying demand strength is quite good. We've seen a lot of investments, particularly with respect to transition for the carbon emission transition and then EVs and all those things. So that's been the major overall macro driver. Coming to say India, so thing is that a lot of the stocks were very, very underpriced up till a while back, and there is repricing definitely happening. So if you start with non-ferrous, so Vedanta has been at the forefront in terms of adding capacities. They've been very low cost. Obviously, they've had a lot of balance sheet issues, which gradually can get resolved if these kind of prices sustained for even, 6 months to a 1 year period. We're going to see massive earnings upgrades coming there, especially because if you start, repricing, putting in current commodity prices, plus you added the currency weakness. And also another major thrust that is happening is that a lot of raw material integration is increasing. They're adding new bauxite mines, new coal mines. So you can see a significant earnings upgrade coming in here, and similarly, it also holds true partially for Hindalco. In case of Hindalco, they're adding, they're getting their Novelis business listed. We're hearing very big valuation numbers of around 18 billion and things like that. So if you just try to do SOP valuation, you could see 50% kind of upside just on based on if the Indian market also starts valuing Novelis with not much of a holdco discount. So there is a lot of earnings upgrade. That's the reason why these stocks are moving higher, and I think there is a lot of more upside coming in from here as well. If you move to the smaller names now, for example, for iron ore, which I think has seen a 10% rally, so Indian Steel is going to add a lot of capacity over the next 2030. We have a target of like 300 million tons, and so we need a lot more iron ore than what we're already doing. The major players in that would be NMDC. There's also Godavari Power, which is adding a lot of capacity. Then there is Lloyd Metals, which is also has very big plans to add iron ore capacity. But thing is that they can easily get constrained. So obviously, market is started giving much better valuation now because the cash flows have been very robust, and Indian iron ore is at a huge discount to the Chinese, iron ore landed prices. They're at about $130 kind of. We are you X mine prices are about 6,000 rupees. So the huge gap which is there, and definitely is kind of so there is a lot of investment going to happen. And see the economic stage that India is in when we talk of GDP going up so many trillions and things like that. It's metals which is going to see the maximum demand growth in the initial phases. So long as our per capita does not reach $6,000, the growth in metals will be much higher than the growth for services and things like that. So I think
so Rahul, if you had
to stocks, yeah.
So just if you had to recommend two stocks where the upside is the most, which ones?
No, you can see that the mispricing and plus the commodity basket for Vedanta is fabulous. They have a zinc exposure, they have iron ore, they have steel, they have crude oil, they have aluminum, which is actually the largest in the country. So Vedanta, I think, would offer significant. But case of Hindalco is more of a repricing for the Novelis asset. Although there was setback when they increased the capex budget for Novelis, but I think that will be taken in a stride because the valuation what they seem to command of their significant. And in case of ferrous, there is obviously the larger ones are much better. So over here, say JSW has always been slightly expensive. So although they have a very robust pipeline, but I think they're slightly traded at a premium. And in case of Tata Steel, they've had these issues in Novelis, in Chorus, but that's getting resolved gradually. So that is also a player. But I think in steel, the smaller players are looking far more interested. For example, like a Godavari, which I mentioned earlier, which is not exactly a pure steel play, but is more of a iron ore plus steel play.
Okay. So you like Vedanta, you like Hindalco, and perhaps Godavari Power and Ispat in the smaller players, right? So quick word on Vedanta. They're raising money. There is a board meet tomorrow scheduled to raise some money via rights, FPO, equity. How much do you think they will raise? What's the market expecting, and what would be the utilization?
So I don't really have a number on that, but see, obviously the key issue is the debt on the Vedanta balance sheet and the parent balance sheet. And the faster they get it lower, say, I think once you drop below a number of, I think currently it's about 6 billion. If they get below 3 or 4 billion, nobody will even talk about it. Then we can see a quantum jump in the, the repricing of the domestic stock, because that's a big overhang which is there. And once that gets out of the way, we can see the stock trading at fair value, which is significantly higher from here. And also there is a caveat that the current commodity prices hold for some time, which seems to be likely because we've seen the kind of move after some time. So these kind of don't fizzle away so easily. And like I said, also there's a lot of raw material integrations is going on. So that will also lend support to the earning growth that we are expecting.
Okay, all right. Rahul, we'll leave it on that note. Thank you for joining in and giving us your views on a lot of these metal stocks. Well, we do have to take a break on that note, but on